6 key macro signals to watch. July 26, 2025. Tariff uncertainty, Fed rate cut, market trends. Navigating a week of economic signals, what you need to know. As we approach the week ending July 26, 2025, the economic landscape is marked by uncertainty, particularly regarding tariffs. This week, the most significant data point was the core sector growth, which saw a modest increase to 1.71% for June 2025. However, the growth for the first quarter of FY26 was less impressive, sitting at just 1.34%. Notably, Chris Waller from the Federal Open Market Committee FOMC provided the first indication that a rate cut may be necessary during the upcoming Federal Reserve meeting on July 30. In terms of market sentiment, the looming Friday deadline for reciprocal tariffs adds to the cautious atmosphere, especially as the Indo-US trade agreement remains elusive. Key data releases this week include the Fed meeting on July 30, along with updates on the Index of Industrial Production, IIP, and the fiscal deficit for June 2025. U.S. bond yields decline amid rate cut speculation. The following table illustrates the fluctuations in U.S. 10-year benchmark bond yields over the past 5 trading sessions. Date, price percent, open percent, high percent, low percent. July 25, 2025, 4.386, 4.392, 4.382. July 24, 2025, 4.408, 4.384, 4.442, 4.382, equal July 23, 2025, 4.388, 4.360, 4.398, 4.354. July 22, 2025, 4.336, 4.398, 4.328. July 21, 2025, 4.370, 4.427, 4.427, 4.352. July 18, 2025, 4.431, 4.443, 4.451, 4.416. Data source, Bloomberg. The bond yields, which settled at 4.386%, experienced a decline following Waller's suggestion that the Fed should consider cutting rates to support economic growth. According to the CME FedWatch tool, there is a 60%. However, the U.S. budget deficit following the OBBBA could pose a significant concern. Last week, the yields reached a peak of 4.442% and dipped to a low of 4.328%. U.S. dollar index. DXY dips as rate cut anticipation grows. The following table shows the performance of the U.S. dollar index, DXY, which measures the strength of the dollar over the last 5 trading sessions. Date, price percentage, open percentage, high percentage, low percentage. In paragraph, July 25, 2025, 97.38, 97.18, 97.55, 97.11. July 23, 2025, 97.21, 97.47, 97.61, 97.19. July 22, 2025, 97.39, 97.87, 97.99, 97.31. July 21, 2025, 97.85, 98.36, 98.51, 97.70. July 18, 2025, 98.48, 98.49, 98.57. 98.10. Data source, Bloomberg. The U.S. dollar index closed the week at 97.64, significantly lower than its peak of 110 in January 2025. The decline in the dollar's value followed Waller's comments regarding the necessity of a rate cut to stimulate growth. Throughout the week, the DXY reached a high of 98.51 and a low of 97.11, with the 98.99 range proving to be a formidable resistance level for the index. India's benchmark bond yields experience a slight increase. The table below outlines the 10-year bond yields in India over the last 5 trading sessions. Date, price percented, open percented, high percented, low percented. Last date in price, June 25, 2025, 6.353, 6.365, 6.327. June 24, 2025, 6.329, 6.312, 6.330, 6.321. June 23, 2025, 6.312, 6.311, 6.313, 6.307. June 22, 2025, 6.308, 6.300, 6.309, 6.294. June 21, 2025, 6.299, 6.307, 6.307, 6.296. June 18, 2025, 6.305, 6.30, 6.309, 6.296. Data source, RBI, in India. Bond yields have edged up to 6.353%, as market participants speculate that the Reserve Bank of India, RBI, may adopt a wait-and-see approach during its upcoming Monetary Policy Committee, MPC meeting in August. The RBI has already implemented a total rate cut of 100 basis points and reduced the cash reserve ratio, CRR, by another 100 basis points, suggesting that they may prefer to allow these changes to take full effect before making further adjustments. Last week, the 10-year bond yields in India peaked at 6.365% and fell to a low of 6.294%. Indian rupee faces pressure amid global market instability. The following table presents the official USD-INR exchange rate over the last 5 trading sessions. Date, price PRURS, open PRURS. Free 25.25, low KRURS. 86.503, 86.43, 86.405. July 24, 2025. 86.445, 86.241. July 23, 2025. 86.38, 86.328, 86.471, 86.284. July 22, 2025. 86.322, 86.195, 86.441, 86.180. July 21, 2025. 86.195, 86.134, 86.362, 86.132. July 18, 2025. 86.010, 86.244, 85.972. This week, the USD-INR exchange rate weakened from 86.150 in dollar to 86.503 dollar, consistently remaining above the 86 mark and closing above 86.50 dollar. Despite a decline in the dollar index, the Indian rupee faced pressure due to global uncertainties. Last week, the USD-INR reached a high of $86.132 and a low of $86.641, driven by demand for dollars from oil companies. Brent crude prices struggle to maintain $70 per barrel. The following table details Brent crude prices over the last 5 trading sessions. Date, price, dollar per barrel, open, high, dollar per barrel, low per barrel, high prices, dollar per barrel, knowing, dollar per barrel. June 25, 2025, 69.18, 68.54. 68.49. June 23, 2025, 68.51, 68.92, 69.10, 68.0. June 22, 2025, 68.59, 69.12, 68.12. June 21, 2025, 69.21, 69.63, 68.43. June 18, 2025, 69.28, 69.55, 70.77. Data source. Bloomberg. Brent crude oil prices face downward pressure due to increased supplies from OPEC+ and concerns regarding demand. Throughout the week, Brent crude prices failed to surpass the $70 per barrel mark, ultimately closing at $68.44 per barrel. The highest price recorded last week was $69.86 per barrel, while the lowest was $68.00 per barrel. Supply chain delays in oil movement continue to pose significant challenges. Spot gold prices remain within a narrow range. The following table presents the international spot prices of gold in dollars per troy ounce. Date, price dollars os, open dollars os, high dollars os, low dollars os. Also sets 1 price per ounce, 3,377.18, 3,325.05, 3,368.15, 3,877, 3,393.47, 3,351.40, June 23, 2025, 3,387.78, 3,431.26, 3,439.09, 3,381.45, June 22, 3,431.50, 3,395.81, 3,433.56, June 21, 2025, 3,395.62, 3,401.85, 3,344.48, June 20th, 2025, 3,349.14, 3,349.23, 3,350.17. Although gold briefly surpassed $3,400 per ounce, it struggled to maintain those higher levels as buying interest began to wane. Throughout the week, gold prices reached a peak of $3,439.09 per ounce and a low of $3,325.05 per ounce. Final thoughts. As we analyze these macroeconomic signals, it's clear that the interplay of global events, monetary policy, and market sentiment will continue to shape the economic landscape. What are your thoughts on the potential rate cuts and their impact on the markets? Do you agree with the current trends, or do you see a different direction? Share your opinions in the comments below. 4 high-potential stocks to buy today. Varun Beverages, Sumitomo more, 8 to 10% upside. Imagine waking up to a market that's showing signs of a significant turnaround after several days of losses. That's exactly what happened on Tuesday, with auto and pharma sectors leading the charge. The Nifty, our benchmark index, gained 0.6%, forming a bullish engulfing pattern, a powerful signal that a substantial recovery might be on the horizon. But here's where it gets interesting. Experts are seeing more than just a short-term bounce. Rupee, a seasoned technical analyst from LKP Securities, believes we're witnessing the start of a recovery supported by positive divergences on both hourly and daily charts. He predicts that if the Nifty can push past 25,000, we might see it climb all the way to 25,200. However, he also notes that 24,750 could act as a support level if the market decides to pull back. Given this optimistic outlook, let's dive into some specific stock picks for Wednesday. First up is Sumitomo Chemical, currently trading at Rs 608. With a potential upside of 10%, this stock looks particularly promising. The recent one-week correction seems to have reversed, forming a crucial reversal pattern around Rs 576. If the price can break through previous swing highs near Rs 615 to 620, supported by increasing volume and a positive relative strength index RSI, we could be looking at a solid return within 2 to 3 weeks. Nagaraj Shetty, Senior Technical Research Analyst at HDFC Securities. Moving on to Ajanta Pharma, which is trading at Rs 2,827. This stock has been forming a rounding bottom pattern over the past few months, a sign that it might be ready to break out. Smaller timeframe charts show bullish patterns with higher tops and bottoms, suggesting a potential upside move above Rs 2,850. Positive volume and RSI patterns add to the bullish sentiment. With a target of Rs 3,080 and a stop loss at Rs 2,700, Ajanta Pharma offers a compelling opportunity over the next 2 to 3 weeks. Nagaraj Shetty, Senior Technical Research Analyst at HDFC Securities. Next, let's look at JB Chemicals and Pharma, currently priced at Rs 1,802.60. The stock saw a 5.43% surge today, forming a strong bullish candlestick pattern with above-average volume, indicating renewed buying interest. Key exponential moving averages, EMAs, have consolidated, often a precursor to a strong directional move. The Relative Strength Index, RSI, is in bullish territory at 71.80, and the Average Directional Index, ADX, is starting to rise, suggesting a developing trend. With price comfortably above all major EMAs and technical indicators pointing upwards, JB Chemicals looks poised for further gains, with a target of $1,900 and a stop-loss at $1,750. Drumil Vithlani, technical research analyst at Bonanza. Finally, we have Varun Beverages, trading between 510 to 515. This stock recently broke out of a flag and pole pattern, accompanied by a strong bullish candlestick and a spike in volume, signaling renewed momentum. It has formed a higher high and higher low structure, confirming its uptrend. Crossing above major EMAs, and with an RSI of 67.93, approaching overbought territory, and an ADX of 32.81 indicating a strong trend, Varun Beverages could offer a favorable risk-reward ratio with a target of Rs 555 and a stop-loss at Rs 498. Drumil Vithlani, technical research analyst at Bonanza. And this is the part most people miss. While these stocks look promising, it's crucial to monitor market conditions closely. The market is dynamic, and even the best technical setups can be affected by unexpected news or economic shifts. So, always be prepared to adjust your strategy if necessary. What do you think about these picks? Do you agree with the technical analysis or see things differently? Share your thoughts in the comments. Why MSCI India Index trails emerging market peers in a stark reversal. The MSCI India Index is currently lagging behind its emerging market counterparts in a surprising turn of events. As the trading day approaches, we present a summary of the significant news and developments that are poised to influence market movements. Today, we focus on the following. Good morning, I'm Chiranjani Chakraborty, an equities reporter based in Mumbai. It appears that Indian stocks are bracing for another day of decline, impacted by a combination of technical indicators and fundamental issues. The Nifty index has fallen below a crucial support level, and there is a noticeable stagnation in the progress of the U.S. trade deal, coupled with mixed results from corporate earnings. Moreover, regional markets are also experiencing weakness as investors await major technology earnings reports and the Federal Reserve's upcoming policy decisions. In India, significant earnings reports scheduled for Tuesday include those from the engineering giant Larsen Toubro, the power producer NTPC, and the paint manufacturer Asian Paints. But here's where it gets controversial. Are these market trends indicative of a larger economic issue? Or are they simply temporary fluctuations? As we delve deeper into these developments, it's essential to consider how they might affect your investments. What are your thoughts on the current state of the Indian market? Do you believe it will recover soon? Or are we in for a prolonged downturn? Share your opinions in the comments below.